providing short ticket loans through various gold branches gave the company an entry into the society, and now they are able to cross sell other financial products through the same branches. Consolidating giants gives out the best return in one post. The more is the consolidation in stock price, the more you get when the re-rating happens. See, if the company is gaining momentum in profits and with a stable base of diversification, then the holding period of the stock does not matter. The more is the consolidation, the more we get the company at a cheaper rate. When we are adding on to a growing business, we want a cheaper price or a higher price. You decide. So Manappuram is available at a price of 2019 level. Now is 2024. So why won't I add more? The company has grown by a lot. From 900 crore of net profits, it is now generating 2200 crores of net profit per year. The well diversification of gold business with housing, microfinance is just a cherry on top. The market thinks this is a gold lending business, and that is why it is rated as such. Gold lending is seen as well-grounded, low-growth business. As soon as the market realizes the diverseness of the company, the re-rating will follow. So I am happy with low prices that I am getting for the stock. Providing short ticket loans through various gold branches gave the company an entry into the society, and now they are able to cross sell other financial products through the same branches. The gold branches all over India are spread across small cities and towns. The diversification is key to microfinance loans, as you are not in a position to die out if the political or climate situation of a state changes. Hence, the opportunity is vast and the probability of an asset class transforming into a non-performing is quite low, because one region will compensate for the other. High interest rate environments are not good for micro lending space and NBFCs. Why it is not good? Because due to contraction in NIMs, net interest margins. Still, Manappuram was able to thrive throughout the contraction in credit cycle. They are so hungry to grow that even a debt of 9.5% levels, did not deter them, and they raised $300 million in 2024. The credit hungry population are ever growing. The demand for finance is such that even Bajaj Finance people commented that there is a need for 300 more Bajaj Finances all over India. There is so much demand for NBFCs. The industry is expanding at such a rate that even the pie is getting bigger and bigger. So the demand for finance is at all-time high, that even with lower credit cycle, the company was able to grow up its profit in last 1 year 150%. The company is valued at 15,000 crore market cap. The concept of ever-growing pie shows that the demand is going to increase from here. So the profits of 2,200 crore could easily reach 10,000 crore in next 10 years. So when the country is expected to grow 8 to 10% CAGR for next 10 to 15 years, then how can a NBFC, such good NBFC, remain at 7 times earning? The NBFC has to grow with the nation to support the growing entrepreneurs to build a foundation for Viksit Bharat. The NBFC is a leveraged business. The more is the leverage, the better is the opportunity to make profits. So with return on equity crossing 20% in 2024, increasing increasing of the leverage by issuing coupons for $300 million debt was a brilliant plan. The demand growth is leading to credit growth for the company. Even at a high interest rate levels, once Fed start cutting out the interest rates, the cost of borrowing is only going to get cheaper, which in turn is going to boost up the net profit by increasing the net interest margins and the company getting more profitable by the year. Let's see what happens. Thank you for watching. Have a nice day.